Hello, hello, hello. Welcome, everyone. Welcome, everyone. I'm very excited to get started today. And yeah, give us 2 minutes. We are nearly ready to go. Just waiting for a couple more people to show up. Just waiting for the last couple. So, welcome, Alan. Welcome, Sandy. Welcome, Mustafa. Welcome, welcome. Just waiting for one or two more people, including Matt, who's trying to join the webinar. Hey, Matt.
Hey,
Hey,
sorry
hey.
about that. It asked me for a password and I was not prepared for that.
Sorry about that. Also, I actually started the webinar because I thought you might be in the attendee waiting room rather than the other waiting room. So,
No.
no problem. We have three more attendees. We'll get going in about 30 seconds.
All right, perfect.
Nice. Looks beautiful where you are, San
It,
Diego.
yeah, San Diego. It's hard to complain here. Let me just load up the. All right, are you seeing the screen share okay?
Beautiful. Awesome. So, roughly how long's your presentation going to be today, Matt?
About 20, 25 minutes, right in that neighborhood, and then plenty of time for questions if anybody's got any or want to get into any specifics.
Awesome. So the chat should be live. So if you've got a question throughout, feel free to drop it in the chat. Feel free to otherwise add it in the Q&A section. You'll see both those chat buttons, the QA buttons at the bottom of your screen if you're attending live. If you're watching on the replay, sorry, live chat doesn't work. I'll be here in the background. I'll be off camera, but I can come on to, if there's any good questions come up, I can feed them in. Or if you just want me, just say my name 3 times and I magically appear in the background.
Oh, nice. I could use that once in a while in real life.
That doesn't sound as good as Remuzzi, 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 though, which sounds way better than Cavendish, just too many syllables. All right, same syllables, actually. All right, perfect. Well, good to see you, Matt, and I will hand over to you if that's okay.
Perfect. I'm ready to go. All right. Well, thank you everyone who's joined and for sure everyone listening on the replay. This is Ecom Owner Tax Saving Strategies. It's something we've been doing for quite a few years now, and I'm continually impressed by how screwed up the regular accounting community can get when they get into e-commerce. E-commerce is really its own animal. It works differently than your typical Main Street business. So if you are an e-com business owner, you're really going to get significantly different and better results, I think, working with people who understand the business you're in. And in particular, the topic today is income tax. Now, I know, income tax is not anybody's favorite subject. I'm under no illusions that anybody's excited to talk about income tax. But what I think people can get excited about is the idea that it can be much lower or even zero in many cases if, again, you know what you're doing, you do it right. And the idea of zero income tax, that suddenly gets pretty exciting, pretty interesting. So let's run through this and see what's different about ecom and what you should be thinking about, and whether or not you might be one of those people who'd qualify to really knock a big chunk out of your tax bill this year if you are able to do it right. All right, so generally, let's start top level, sort of tax philosophy. Um, I think a lot of people are under the impression, hey, taxes are taxes, the rules are rules, they're all written down. One tax preparer should be good as another. They're all following the same playbook, right? Well, not really. There's a lot of gray area. There's a lot of area open to interpretation. And then there's just a lot of, general mistakes or just lack of experience, lack of knowledge that comes into play, right? I mean, you could sort of say the same thing about dentists, right? They all go to dental school. They're probably all the same. Well, not really. I mean, one person might do a wonderful job and it's a great experience. You barely feel a twinge and, you come out of there thinking, oh, that wasn't bad at all. You might go to a different dentist and it's a complete hack job, right? You'd rather have your mechanic working on your teeth than that guy. So tax is the same way. There's all different levels and they're definitely not all the same. There's also sort of a range of approaches, right? Some people are super conservative They won't maximize your deductions. They won't suggest anything to you. They won't help you save. Their philosophy is, hey, you made money, paying taxes is just part of the deal. And, it's just the cost of doing business. And other people are at the other end of it. They're sort of pushing tax strategies that, will literally, some people end up saving money, but other people end up in jail, right? So we want to kind of be in the middle of that. I feel like my criteria is I want to get you the biggest possible savings and still make sure that everybody sleeps well at night. We're not worried about getting in trouble, getting notices, getting caught or found out, or having to explain things that are awkward to explain, right? So we want to do as much as we possibly can without losing any sleep over it. And, obviously save as much as you can, but then also, sometimes people, I think, overthink taxes. They feel like, it's not about, what you earn, it's about what you keep. And they spend a lot of time worrying that they didn't get enough tax deduction, they didn't save enough. And I think, it's worth spending a little bit of time making sure you've optimized this, but really the rest of the year, the other 364 days a year that isn't tax day, if you work on growing your business, that's going to give you the biggest bang for your buck, not saving, right? The most you can save is all, right? You can get down to zero tax, which is great. But if you can grow your business from 100,000 to a million to 10 million, that's where the real value comes in, not just in the savings. So give tax its due, but don't over stress on tax. So now let me tell you a quick story about a very typical kind of e-commerce seller. This is not his actual picture, and Bob is not his actual name, but he is 100% a real client that came to us a few years ago. He is an ecom business owner, about 2.2 million in revenue, about 320K in income. He originally called because he wanted help on his taxes, but he didn't want to do any bookkeeping. And our typical requirement is, in order to do the taxes right, we've got to do the books right. If you've got perfect, pristine books, great, then we can do the taxes. But if your books aren't right or they're messed up, there's no way to do a good job on taxes. So he passed on the whole thing. He thought, it didn't make sense. He could find somebody cheaper to do it, and he went on his way. Then he called back about 6-7 months later. He'd gotten a notice from the IRS. The IRS said, hey, you owe an additional $75,000 above and beyond what you paid already in your taxes. And he didn't think that was right. He called his CPA. His CPA said, hey, we did the taxes. There's nothing else to do. If they say you owe it, you got to pay it. Right. So that's when he called us and said, hey, can you guys help? And he'd paid already about $75,000 in taxes. So they wanted $75,000 or so more. The way it ended up, not only did we not have him have to pay an extra $75,000, we got him a nearly $78,000 refund on the amount he had paid. So nearly everything that he had paid, or there was a couple extra things in there, but anyway, got him about $78,000 back. So, the bookkeeping was bad, so there was mistakes and problems there. The CPA he was using didn't understand how ecom worked and misreported some things. And so once we went back, we redid the bookkeeping, we got that right, and then we filed the tax return the way we do, knowing what we know about ecom and how it should work. And it was a complete reversal for him. And I think it drove the point home for him, hopefully, at least in that case, that taxes aren't all the same, and finding a cheap preparer, while that may save you a few $100 on the prep fee, can end up costing you a ton. And price and value are really two different things. So he didn't like our fee at the outset, but versus the $150,000 swing of what he paid versus what we got him back ultimately, I think that was more than worth the $5,000 or so dollars he paid us between the bookkeeping and the tax, right? He came out $145,000 ahead of where he was when he decided to skimp on the bookkeeping and skimp on the tax prep. So I think there's definitely, and this is not an unusual story. This is a pretty common story. In fact, here's some more examples. And these are all, absolutely real clients that we have worked with, that we have made these actual changes for. I pulled this right out of our file. So original client one is originally came to us taxable income $274,000. Once we got done, we reconfigured things. The new taxable income on his tax return was zero. So obviously zero taxable income, pays zero taxes on that business. Client two, original taxable income, $73,215. Once we did our thing, new taxable income, $0. Doesn't mean that the business didn't make any money, but it means that the amount that he owed taxes on in this case came down to zero. There was actually a loss, but you only go down to zero, and then you don't pay any tax on that, and then you carry the loss forward to apply against future years. And then client three, original taxable income. This was a pretty sizable business, $478,000 of taxable income for that tax year, and we got it down to 27,584. And then if you know that the standard deduction is almost that amount. So the actual taxable income, was pretty negligible, pretty close to zero for that client as well. So that's kind of the difference between, again, understanding ecom from an accounting standpoint and having, literally hundreds and hundreds of ecom clients that you work with on an annual basis and a monthly basis for bookkeeping, and somebody who's just sort of the down the street CPA, or has maybe a couple ecom clients, but it's not their specialty. It makes a huge difference in actual dollars and cents. So what are the strategies that you should be thinking about from an income tax standpoint for your e-commerce business, whether you're working with us or someone else? First thing is build the foundation, right? You can't get the best result or an accurate result on your financials, on your accounting, on your tax return, if your bookkeeping isn't done right? If the books are wrong, then there's zero chance your tax return is going to be right. And some of those people go, oh, I don't need that. I've got an Excel sheet I track it on, or I've got my bank statements. I just total this up at the end of the year, or I have Seller Board, that gives me the numbers I can use, or you give to my tax preparer. Those things are not real bookkeeping. I guarantee you are missing opportunities. You are getting things wrong if you are using anything less than a full accounting program, which would be like QuickBooks or Xero or Zoho, something that has double entry accounting and provides a profit and loss as well as a balance sheet. It tracks your accounts, reconciles the bank statements and credit cards. If you're not doing that, I guarantee, again, you're leaving money on the table. You're getting less than optimal results. And it's not just, that your taxes then aren't going to necessarily be right. But if you ever go to sell the business, you're going to be leaving money on the table by not getting maximum value from selling the business if your financials are not done correctly and done, month by month as they should be each month. So step one is just, build the right foundation, use proper bookkeeping. Another question we get is, do I need to keep every stupid receipt? No, the answer is the IRS has said, you can use your bank statements, use your credit card statements as proof you've made payments. The ones you may want to keep is the ones that they're more likely to scrutinize. So if you are, eating out and talking about the business and want to use the meal as a business expense, those receipts are the most likely to be questioned, those meals out. So keep those receipts, make a little note, dinner with John discussed, ecom strategies, and then you can write it off, no problem. If you give cash to charity, make sure they give you a receipt, and any kind of cash payment you make, which includes things like using Venmo. If you're paying people that way, then have an invoice from them, get a W-9 from them so you can issue a 1099, have some way to track that, because cash payments by themselves don't hold up well in the event anything gets scrutinized. But if you're using your American Express card to buy Facebook ads, or you're wiring money to China to buy inventory or something, those things, you've already got those on your bank statement, on your credit card statement. You don't need additional receipts to prove that that money went out for the business. And then use, real costs. Sometimes I see people want to put in, I'll just put down $10,000 for office supplies. Well, the IRS computers are programmed to look for super round numbers, right? So if you're going to make up a number, I don't recommend making up numbers, but if you're going to make up a number, make up $9,982.17. Don't make up 10,000. Those round numbers are a dead giveaway that you didn't really spend that amount. You just pulled that number out of wherever you pulled it from, but it was made up, not accurate, not real. So use the real numbers, the real costs, so that you get credit for it and you don't trigger any red flags. Another big expense, another thing specific to ecom is you really want to count your current inventory value at the end of the year. Almost always there's less real inventory on hand than whatever was on the books because things get lost, things get stolen, things get damaged, returns come in that are unsellable, etc. So you really want to keep a running actual total of your inventory on a regular basis, and at minimum once a year go through and count what you've actually got, and if it doesn't match what's on the books, then we can post the adjustment, or you can post the adjustment. But otherwise you're carrying along value that you don't really have anymore. You're missing out on deductions. Now, another strategy for ecom sellers, if you're profitable, is setting up an S corp, or if you're an LLC, convert your LLC to an S election, which is an easy process. Happy to help you with it. But the benefit of this is if you're an LLC, everything that you make as profit is subject to self-employment tax. But if you're an S corp, you can name your salary and it can be really low. And then everything you make above and beyond that is not subject to that self-employment tax. Self-employment tax is $15,000 and it goes up to over $160,000 a year of compensation. So we're talking about a pretty sizable extra tax on top of income tax that you're subject to if you're simply operating as an LLC or as a sole prop, even worse. So it makes sense as soon as you're profitable and profitable to the tune of 30,000 or more a year, you really want to consider that S election. It adds the cost of, putting yourself on payroll. And if you're, a single member LLC or a sole prop, it adds the cost of filing an extra return. But literally we flip clients all the time from LLC to the S election, and immediate savings of $10,000, $12,000, $15,000 right in their pocket just for changing the forms that they're filing their taxes with. I mean, it is a no-brainer saving if you qualify for it, and it's a super easy thing to do. Just to break it down a little further, this is what it looks like. Again, if you had a sole prop or a single member LLC with $150,000 in profit versus an S corp or S election LLC with the identical profit, the S corp, you pay yourself $20,000 in wages, you pay your payroll tax on that of $3,000. If you're the sole prop or a single member LLC, $150,000 of your $150,000 of profit, in other words, 100% of it, is subject to that payroll tax. It's the difference between paying $23,000 or paying $3,000. So in this case, it's literally putting an extra $20,000 in your pocket. If your CPA is not suggesting this to you and you make $150K a year, fire that CPA, come work with us, or at least go work with someone else who's going to say, hey, you were paying a stupid amount of taxes by not making this very simple change. All right, now cash basis versus accrual basis filing, and I promise those are the only fancy accounting words I'm going to use. Cash basis filing just means we file it like basically whatever happens in our bank is what our financials look like. Accrual basis is where you're matching your sales in the month to the cost of goods sold in the month. No matter whether you bought a ton of inventory that month or no inventory that month, you're still going to show cost of goods sold related to the sales. So that's kind of the accrual basis. It is really, for an ecom business, the only way that you should be doing your month-to-month bookkeeping, because it really tells you what your profitability is. It is also 100% necessary for the maximum sale value. If you're going to sell your business and your books aren't on accrual basis, I'm telling you right now, you're leaving a ton of money on the table. We help clients sell their businesses all the time. We always put their financials on accrual because one, buyers at this point expect it. Brokers, most of the time, if they know what they're doing, which is, the good ones, will not even list your business unless it's on accrual basis because they know how much you're giving up in the sale value. So 100%, if you're an e-commerce seller, you want to be doing your books on a monthly basis on accrual. But here's the catch: accrual basis, not good for taxes. It shows you being profitable, which you are and is good, but you haven't actually collected a lot of that cash and you don't get the benefit of writing off the inventory as an expense. So on cash basis, terrible for tracking performance, not the way to keep your books on a month-to-month basis, but excellent for delaying when you owe tax and getting that tax bill down to zero if you're a growing e-com seller. So the benefit of working with us is we do it both ways. We keep your books on accrual basis on a monthly basis, and at the end of the year, we flip it to a cash basis version and use that for filing taxes. And sometimes people go, wait a minute, does that mean you're keeping two sets of books? Aren't you not supposed to do that? Isn't that a big no-no? No, it's the same business. What I compare it to is you've got a car, you're driving down the highway, you can measure your speed in kilometers per hour or miles per hour. It's the same car going the same speed in the same direction on the same road, right? Nothing has changed except how you're counting, right? So accrual and cash are two different ways of counting the performance of your business. It's the same business, we're not hiding anything, we're not lying about anything, we're not keeping two sets of books. It's one speedometer. It just has two different ways of measuring, right? So for profitability measuring, we like to look at accrual because it makes us look like we're going really fast, right? That's the kilometers per hour. We're doing 220 kilometers per hour. We're killing it, right? And then we look at cash, and that is the same business, same results. It's just slower. It's a less taxed way of looking at the business most of the time. And so that's kind of the miles per hour view. It's, we're not going as fast in miles per hour as we're going in kilometers per hour. And if we're paying our speeding ticket, right, we want it to be in miles per hour. So that's kind of the difference. All right, so the benefits of cash filing for taxes is that you can write off all of your inventory that you purchased for that year. And that means that if you had a really good year and you've got a lot of profit and you want to stock up on inventory in December when you just had a great month, a ton of sales, you can buy ahead on inventory and that will reduce that profit for that year instead of in the future year when you actually sell it. It also means you can write off the sales you haven't been paid for. So, Amazon pays you typically every 2 weeks. You could have, again, a really good December. Some of that money isn't going to land until January. So cash basis filing allows us to push that January money out into January when we get it paid and not have to count it this year. So again, it helps really cut back on that profit that we have to report for this year. If your business is pretty flat year to year, there's less of an advantage here. But if you're in growth mode, which is a lot of e-commerce businesses, growing year over year, that means every year you're pushing off sales and you're stocking up on inventory, and that really can bring that income tax bill down to zero or near zero. These two changes alone often result in removing all of the paper profits off the accrual version when compared to the cash version for tax filing. Now, another place that e-com businesses get screwed up on tax is when they get that Amazon 1099. You want to, take a look at the Amazon 1099 that you get and then compare it to your report for the year. You'll notice the 1099 is always higher, somewhere between usually 2 and 5% higher than the highest number of sales you'll see anywhere else, right? If your typical down the street CPA doesn't understand Amazon 1099 is different than the typical 1099 they're used to, and they use that higher number on your tax return and then everything else is the same, that extra is going to flow down to your net profit line, and now you're going to pay taxes on phantom income. You have to know to offset that with additional fees and COGS to get it back down to where it should be. And not doing this is one of the single biggest problems. Back when I was telling you Bob's story about, overpaying taxes. That's one of the things that happened. His CPA used the Amazon 1099 as his total sales, didn't offset it. And with 2.2 million in revenue and that extra 5% that Amazon throws in there, that was a huge part of the reason that he had such a big tax bill he didn't deserve, because the CPA just didn't understand how the Amazon 1099 tends to overstate revenue and has to be offset. Now, another thing that happens, especially when you don't do real bookkeeping or you're not working with a CPA who's trying to save you the most possible money on your taxes, is we just forget about stuff. Having an accountable plan for reimbursable expenses, taking things off like cell phone, meals, travel, continuing education, auto reimbursement for any driving you do related to the business, any equipment you've bought, anything else in your home office that you spent money on. We want to go through that and make sure that you've got the maximum number of potential write-offs included. You might have forgotten some things that you didn't know you even could write off. We're going to go through all of that with you. If you're an S Corp, you can run your health insurance through the business, and all kinds of stuff that you might not have realized is going to help lower your tax bill. We want to help you find all that stuff so that you're not missing out on any expenses. And again, when you don't have bookkeeping to start with, it's easy for them to just take whatever you give them, your seller board or your Excel sheet, and miss out on all kinds of additional expenses you didn't even realize were write-offs or didn't run through your business account, but could have, should have, to save you on taxes. So another thing you can do, if you've done everything else, you still find yourself owing tax and you've got some additional cash you don't need for the business, is you could set up a retirement account. Whether you have employees or you're the only operator in your business, only employer or employee of your business, there's the SEP, the self-employment IRA. You can put away a good amount, up to 69K. The regular IRA or Roth, even without being directly connected to your business, you could throw another $7,000 in there. If you have a 401k, if you set up an S Corp, you're running payroll, you can then add a 401k and set up again up to about $70,000 in retirement savings there. And then if you're really doing well, you really got a lot of money coming in, you could even potentially set up a defined benefit plan, what we used to call pension plans in the old days. And that, in that case, depending on how much you paid yourself and your retirement plans, you can put away up to $200,000. And that is a direct business expense. So it lowers your taxable income by however much you put into that plan. And then when it gets to the point where that plan starts making disbursements, you're getting that money out and then paying tax then. But back, by the time you're getting retirement funds, you're way out of this big high tax bracket and hopefully into a really low tax bracket. So the tax hit is much lower than it would have been if you had to pay taxes on that amount now. So there's even more strategies on how to, potentially save on taxes if we've exhausted all the other options and there's still some taxable income left. Just don't shortchange business needs by putting money in a retirement account that you then can't pull out, or can't pull out at least without a penalty, if the business is going to turn around and need the money to buy inventory or for marketing or wherever else. All right, so now that I've done this, here's some of the most common questions I get as a result of this advice I've just run through. First one off is, my CPA said I have to file on an accrual basis. I'm an ecom seller. I have inventory. I have to file on an accrual basis. Okay, not true. Back a few years ago, it wasn't as clear. The IRS didn't spend any time really making it clear where ecom sellers and inventory sellers fell on this list. And so again, CPAs who were on the conservative side said, well, if we're going to be conservative, we're going to take the most conservative approach. You have to file on an accrual basis. But a few years back, the IRS clarified, and now as long as you're under $25 million in annual revenue, you can file cash basis even as an ecom seller with inventory. So the CPA tells you have to file on accrual basis. They are out of date and out of touch on that. Seems too good to be true that I can show a loss every year. Well, it's the rules are the rules. And the reason you can show a loss every year is because you're following the rules, and it's not a cash loss, it's a paper loss. The IRS is aware of the difference. And if you think about it, it's businesses like Amazon, right? They've had losses for the first 10 years of their existence. It didn't cause any red flags. Nobody was investigating how could they keep running, right? And your business is the same thing. On an actual cash basis, there's enough coming in to continue to operate the business, pay for inventory, pay for everything else you've got, and still go. But by following the rules of the write-offs and the timing of the write-offs that the IRS allows you, filing cash basis, you can have a loss on paper that allows you not to file or owe income tax in. Eventually, it will catch up to you and you'll owe it. But a lot of times that happens when people finally get around to either plateauing the business and then they start owing tax, or selling the business and then they owe tax at the time that they sell. But you can operate year to year as a loss as long as you've done everything right and followed the rules, and that is not a problem at all. We've had clients who've had losses 4 or 5 years running, and not a peep from anybody, no letters, no problems, because everything they've filed is 100% bulletproof. All right, then sometimes I'll hear, well, you told me that, I can be an S Corp, I can pay myself $20,000 a year, and my CPA said that's ridiculous. Reasonable salary has to be a percent of my profits, or a percent of distributions, or a percent of my revenue, or some other rule. The reality is there is no rule. All the IRS says is it has to be reasonable for the work you're doing. Well, the explanation for why you can pay yourself $20,000 a year as an ecom business owner, even if your profits are $1 million a year, is because the platform does all the heavy lifting for you, right? You send the inventory in, then the platform lists it, the platform displays it, the platform attracts the customers, the platform takes the payment, processes the payment, ships the goods, or a 3PL ships the goods, deposits the money to you, they handle returns, they handle customer service, etc. So in reality, you could be asleep for a month, or in a coma for a month, or dead for a month, and your business could continue to sell, generate revenue, generate profits for you. You don't need to be hands-on working it every single day in order for the business to continue to operate and make money. That's why you can pay yourself a low salary and expect that the business continues to work and, is fine. That's not true for the kind of business where, let's say you're a dentist, right? You can't make money as a dentist unless you're sitting there in the dental office every day doing work in people's mouths. If you stop doing that, you stop getting paid. You're basically like an employee of your business. But an e-commerce business can truly generate income without you doing anything. You could sell stuff in the middle of the night and you're sound asleep and the business is continuing to produce income for you. That's the justification why you can pay yourself a low salary, because you don't need to be 24/7 hands-on with the business, or even work 2,000 hours a year, 40 hours a week, 50 weeks a year to produce income. So your CPA that tells you your reasonable salary has to be a certain amount, or you read that online or whatever, not true. We've had hundreds of clients paying themselves between $10,000 and $25,000 a year for years and never gotten a single letter about it. And if we did, I would have full confidence that we would have no problems with that. So I've also heard I can't file cash basis if I do accrual books. Well, I explained previously, right? You're doing both kinds of books, and you can file cash basis and you can keep accrual books at the same time. Not a problem. There's no rule that says you can't. There's another question that says the IRS gets the 1099 amount from Amazon, so we have to report that. Well, yes, you do want to report that, but you also want to offset it, so it gets back down to the actual amount of revenue that you really got from Amazon. But if you don't report the 1099 amount from Amazon, the IRS also has seemed to understand that that isn't always the amount that they should be counting on. They used to years ago, but we haven't gotten a letter from anybody who's come to us from some other CPA filing it in quite a while where they didn't use that amount. So it seems like the IRS may have finally caught on that, the 1099 amount from Amazon isn't really the amount that you're getting. But the safe play is to report the full amount and then deduct backwards from that. Last question, I think here. Sometimes after hearing all this, people go, wow, I realized the last guy really messed up. I paid a ton of taxes last year. can we go back and amend my prior returns for the last few years and get all that money back? The sad answer to that is unfortunately no. If the reason, well, it depends, I guess, is the answer. If the reason that you paid so much in taxes is because literally they just messed up your books, they messed up everything that they filed, then yes, we can fix that, file an amendment and get it back. But if the reason you overpaid your taxes was because your last CPA or whoever did your taxes filed on accrual basis and that they didn't make any mistakes, they just filed on accrual basis, we cannot go back and amend just for the reason of wanting to change to cash basis and recapture that inventory expense and that taking off the accrual last 2 weeks of sales that we didn't get paid out. So unfortunately, if that's what happened, you can't go back in the past and fix it, but you can stop making the mistake from here forward and fix it going forward. So if you're not sure which of those camps you fall into, reach out to me. Happy to take a look and see if there's something we can do about any past taxes that you paid that you feel like maybe now I didn't need to pay. If we can fix it, we'll fix it. If not, then at least going forward, you won't have to keep suffering that pain. So here's what you do. If you're not sure, or if you just want to get a quote or you want to, ask some more specific questions, just email me info@capforge.com and we will set you up with a free consultation, figure out if we can help, figure out what you should owe in tax. And if it's a lot lower than you've been paying, then, hopefully it'll make sense to switch over. We do have, this time of year, taxes are only about 20 days away for S Corps and partnerships, and then a month and a half or so from the personal returns. So there is somewhat limited space available. We can still talk to you, take a look, and if it looks like you're going to owe a big fat amount or even a medium amount or even any amount that you don't think makes sense, please check here first before you file, because like I said, once you file, if the only thing that's different is we would have gone back and on cash basis, we can't amend that. So before you agree to sign off on a big tax bill, if you don't think that's right, tell them you want to go on extension. You can pay it, but then if that's not the right amount, you'll get it all back. We can help you in May, June, July if we don't have time to get it in before March or April. But please don't pay a huge tax bill if you don't need to. It's just a silly way to spend money when there's so many better ways to invest money in your business. All right, that is the total of the presentation, and we will see now if any of you guys have questions that I can answer or anything else I can help with.
Cool. Thanks, Matt. That's super interesting. I have learned a lot about US taxes.
They're not simple, but they are, you can handle it, you can deal with it, you can do it right if you just talk to the right people.
I love it. And so I would encourage anyone who is about to file their taxes, if you were going to file accrual, seems like that's the easiest lever point. If you were going to file accrual, at least get you guys to look at it and see if cash basis is a massive saving. Because I always also thought that you had to file accrual for inventory-based business, at least outside the US.
Yeah, and definitely the rules in Europe and other places are different, but the US has made it relatively easy to come out ahead if you just have to know the difference, though. And a lot of people still, even in the US, even in the tax industry, are just not ecom specialists, and they're giving out less than great advice.
Yeah, and I love the idea of keeping two sets of books, or at least one set of reporting. At the end of the day, it's just accrual reporting, isn't it? It's like, how much money did we actually make on paper this month? And you need to be looking at your balance sheet and your statement of cash flow. Otherwise, you're going to run out of cash anyway in an ecom business.
Absolutely. Did we get any questions? I didn't check the chat. Or does anybody have any questions now that they want to throw up?
Came in. Alex asks how to structure a US non-resident to get the best tax treatment. Should it be a LLC or a C Corp or something else?
So typically for our outside the US sellers, what we most often see and what we tend to recommend is setting up a single member LLC, most often in Wyoming. That's the lowest cost, least paperwork state. And then as a single member LLC, you're considered a disregarded entity. That means you don't pay or owe any taxes in the US. Instead, you would pay in whatever your home country is, wherever you've set up your offshore business. And if that is a lower tax rate than the US, which it often is, then you come out ahead again. You do still have to file a return in the US, but it's an informational return only. You don't end up owing. If you were to do a C Corp in the US, foreign owner or not, you owe 21% tax on whatever profits that business generates each year. And then if you bring money back home, you potentially still are going to owe at home on the money that you expatriate. So generally speaking, a C Corp is not the best way to go. A single member LLC with one foreign owner, whether it be an individual or a business, is the recommended route. And again, most of our clients are setting up in Wyoming just for simplicity and cost sake.
Okay, that's great. Just because I know this is information also going around the back streets of non-US citizens, I know people have recently been pushing opening C Corps and then charging management fees, depending on the management fees from your offshore entity. Obviously, that depends on the size of your profits, but have any of your clients done that?
Yeah, that's another way to take the funds out and basically reduce the profit to zero on the business in the US. And that works, when you're smaller. The challenge with that can be when you get to a certain size, the management fees start to get pretty hefty. And, if every year you're zeroing out profits with arbitrary and large management fees, that can at that point generate some interest from the tax authorities. So it is a way to go. I think the single member LLC is still probably the preferred method, but there's always different ways to approach the same issue.
Yeah, love it. All right. So I think that tax. Oh, Alex, another follow-up question. Are there chances to get a bank loan as a non-resident LLC or C Corp?
It
Which is
is
better?
difficult. Yes, it is difficult to get a loan. Um, Generally speaking, the lenders want you to have been in business for at least 2 years and to show positive cash flow and banking activity before they'll consider, a loan of any size. So generally, if you're operating an e-commerce business, something through Amazon, for example, Amazon lending or some of the other, 8Fig or some of the other lenders like that are more likely sources of money than just a straight bank loan for a new business, whether you're foreign owner or not. The criteria for getting a loan are generally pretty restrictive at the
Yeah.
beginning.
Yeah, a couple of our part seller candy partners, CapForge and AccrueMe, both do inventory-based lending. So they don't need you don't need history, but they will actually check. They're both Amazon-based, so they will check your history of your account and basically do their due dill on you before you buy anything with their money, which I think is the easiest way to do it as a small growing business, because you have an expert look at it. They'll tell you whether they believe in you and whether you're going to use their money in a good way or not.
Yes.
Good questions. I think tax is very can be very personal. So yeah, I would encourage you to reach out to Matt, info@CapForge, if you do have any specific questions, because yeah, as you said, it's a few weeks away till US tax season. So when is now the best time to take action and save yourself some money?
Yeah, absolutely. I think again, people end up owing and paying a lot more than a lot of times they need to simply through, procrastination or ignorance or just, sort of wanting to, it's not something people want to tend to be proactive about or want to think about too much. It's more of a head in the sand situation a lot of times, but that ends up costing you more than, just taking a little bit of time to, figure out how you can do it better, get better results. And again, talk to, people who are experienced and experts in the space, because it's definitely not all the same.
Yeah, love it. Well, thank you, Matt. Thank you for taking so much time to come and share this with the audience. There will be a replay. So my brain is not turned on yet. Just had a baby. There will be a replay.
That'll do it.
A replay going out very soon. I know we've had quite a lot of attendees, so I'm excited to see that and have everyone's feedback. And thank you so much. Thanks, Matt.
Perfect. Thank you for having me. Appreciate it.
See you, everyone.